All right, welcome everyone to the first Q&A session of the week of July, what is it, 6th? 5th, the week of July 5th. All right, got a few people here. I can give you guys my privileges if you just raise your hand if you need it. Otherwise, we'll just do the written questions. What do you think of the ticker FLT on the Toronto Stock Exchange? It's a drone delivery company. It was on a second weekly MRI top, also extension C, okay, or MRI bottom, sorry. Let's go take a look. Why not? Okay, so what am I looking at? I'm looking at FLT drone delivery on the Toronto Stock Exchange. Interesting. Oh yeah, drone delivery right there. TSXV, what's TSXV? Wow, that's a big top right there. I guess drone delivery is more popular during the no, that was during the lockdown. Let's get the MRI up. Let's get the moving averages up. Yeah, see, this is tricky. It has fallen quite a bit. Earnings is coming. There's really not much more it can fall. It's down 57%. It's the second consecutive MRI buy. Oh, that's the weekly scale. Or about the daily scale? Second consecutive MRI buy makes the low, but I don't like today's candle. I really don't. I like the weekly MRI buy. See, like the perfect time to buy this asset was right here, was on June 29th and June 30th, and maybe July 2nd. Now, I'm not saying this would have been a great trade, but if you had shown this to me here, I would have, what would I have said? I would have been screaming, you should buy the asset here as a trader and set a stop loss right below the swing low. There. That would be my stop loss. So what is that? About $1.07, which is like 2 cents lower than it is right now. Okay. It's at 109 and this line is at 107. So I can't, so even though I would have potentially pulled the trigger and go long off of this candle, or this candle, or this candle, or this candle, I cannot go long now. To me right now, this is a bad long because the weekly buy has already played itself out and we're now trading lower on a new lower daily close than at any time in a year, right? Since January of this year. So I would wait at this point. I would wait. I would rather buy it when it breaks a moving average. So this is the daily scale. So this moving average should be the 20-period moving average. It is. So at this point, I would wait for the break of the 20-period moving average because the buying the MRI buy would not have, it has already proven not to work out. Now, if you are long on this trade already, I would just leave my stop loss at like 107 or 104, no lower than 104. Though if you really, I mean, also round numbers can bounce the price, but setting your stop loss at like 98 cents seems a little too far away from the stock. It also depends on how much you've risked. But I wouldn't go in long now. If I was long, I'd stay in. But I would never be short this because of the $1 price. That's an interesting stuff. How will the FOMC meeting today affect Bitcoin price? I don't know. I have no idea. It may not affect it all that much. I don't think they're going to raise rates today, so I don't think much is going to happen. The XY daily is bullish. Wow, look at that. It's daily bullish, but here comes the MRI sell tomorrow. We're going to have to keep an eye on that. Thanks for the heads up on this one. What about the weekly? The weekly is only getting started. The weekly had a beautiful MRI buy, and we still got multiple weeks to go before a weekly MRI sell. Beautiful MRI buy here and a decent MRI sell here. Nice MRI buy here. So the weekly MRI has been very good on the dollar. The monthly MRI is kind of useless right now. No comment. Not very useful. Monthly chart is not very useful. Yeah, that was a very quick analysis. Surprised the dollar is rising again, but daily tops coming. 10-year yield. Haven't looked at that in a while either. Ten-year yield is coming down. I mean, if you zoom out, it's still a downtrend. I mean, yeah, it's possible this was the ultimate low at a 1% 10-year yield, even less, 65, but it's still a downtrend. Just look at your moving averages on a monthly scale. And the long term is still trending down. I don't know where this is going to go. We need to break the prior swing high in order to be bullish on the yield, and I don't see that happening anytime soon. So higher probability that we go to new lows on a 10-year yield? Slightly higher?
Hey, Tone, I'll ask you a quick question. I've heard you mention a few.
Wait, before you do, you're actually still being recorded? Do you want to still be recorded?
Oh, it doesn't matter.
Okay, great.
You had mentioned a few times now, I think maybe even with Phil yesterday, that you're semi-interested in maybe the mid 20K range if there's a bounce up here and then back down there. But I mean, I see that as a potential stopping area, but not a bottoming area.
Why not?
Honestly, I see either 28K as a bottom or 20K or 14K with a small percentage chance of 26,500 area being a bottom.
Okay, well, for me, I'm ruling out 28,000 as a bottom because we've already been there. So if I go back to screen share, I have ruled out 28,000 as being the bottom. If we bounce off 28,000, I will not see that as the bottom because I would see that as a double bottom. Even though, you know, it's potential white cloth, I don't care, okay? So anything significantly below 28K is a potential bottom. So anything basically below 27, like the moment we come close to 27 or anywhere lower is a potential bottom. And the thing is, I am being completely open-minded that any number below at 27 or lower can be a bottom. So I'm not looking for anything specific there. It can be 26 and a half, it can be 24, it can be 21, it could be 14, it could be 3,000 for all I know. Actually, it can't be 3,000. That's the only other one it can't be is 3,000. And the reason why it can't be 3,000 is because 3,000 was already a bottom twice. Okay, it was a bottom here, even though it was 3,800, it was still in the 3,000s. and it was a bottom here in the 3000s, and there was a bottom here in the 3000s, right? So the only one I rule out completely is 3000. That means it needs to be higher than that or lower than that, okay? So there are certain numbers I've ruled out. So I've ruled out 28 and I've ruled out 3. Pretty much anything else is possible, and it depends how it gets there and how it reverses from there.
So what would be your most, this is all speculative, of course, but what would be your most probable area of strong support below 28K?
Any area below 28K that bounces the market faster than we bounced on June 21st. Something equivalent to this, right? Something equivalent to the May 19th reversal or the May 23rd reversal, but not both, okay? You see, the May 19th reversal gave me hope that the bottom is in until this candle happened. You see, this candle, while it did not create a lower low, it did create a lower close. So now the candle itself in isolation is a beautiful reversal candle, especially when you add the next candle after. But because a lower low was made earlier, these two candles combined did not give me enough confidence that the bottom is in. Also, these two candles happened below the moving average, while these two candles being even a stronger reversal. Because look how much we moved. Like on this candle, we reversed 36% in 1 day, day and a half, whatever, you know. In 1.5 candles, we reversed 36%. And we closed above a critical moving average. That is a potential strong reversal. This candle negated that. Now, in isolation, these two candles together, from the bottom to the next day's close, was a 25% reversal. That is also enough of a reversal for me to call the bottom, but I could not call this the bottom because of the way this candle played out versus the prior candle. Now we come to this little guy, right? This little guy, once again, had the same, attributes as this guy, because it was yet another lower daily close without going lower than the prior swing low, and a double low with this swing low. So the charting aspect of this candle was even worse than the prior candle. When you combine this candle and the next candle's close, that's a 20% reversal. Now, a 20% reversal in a day and a half is enough to call the bottom. But considering and there was a weekly MRI, right? But considering the fact that this candle has made the chart pattern look worse, and if you've been a student of my work for a while, Mark, and if you're the Mark that I'm thinking of, you have, you know that chart patterns are more important than the MRI, though not as important as the candle itself. But the candle itself is more short-term and the chart pattern is more long-term. So on a longer-term scale, the chart itself is more critical, most important part. So the charting aspect of how these two candles take place prevent me from calling the low. Now let's go one more time. I mean, the same thing keeps repeating. Now we actually have a green candle as the reversal candle. So we're not going to look at the following candle. We can just look at a single candle's move, or we can look at a triple candle, right? Like if I use the prior candle, big drop, and reversal, we can use the next candle. Well, look at that. Now it's a 16% reversal. See how the reversal gets smaller in percentage terms? But this reversal, while being 16%, 16% is not really that much, but at least this candle made a new swing low and off a new low close. So this candle has a much higher probability of establishing the final low in the market. And while I wanted this reversal to be a 20% reversal, it was only a 16%. I want the minimum of 20, okay? So what am I looking for? I am looking for a big drop and the 20% reversal off the low of that drop. And both a daily low close, a significantly noticeably lower daily close, and a significantly lower daily swing low versus everything that happened between May and June have to be visible around the time of this occurrence. So either the candle of, the candle before, well, it can't be the candle after, right? Because we're talking about a new low close, right? So if we establish a new low close that is clearly lower than the prior low close. The prior low daily close is also a double bottom at 31. So what would a clean lower daily close look like? Somewhere below 30,000 on the close. What would a noticeably lower swing low look like? Something to the 27,000 or ideally lower than 27,000. And then what I would need is an immediate 20% reversal off that low. Then I call the bottom, okay? You saw this occur in COVID, okay? Here is a clear, noticeably low close. And the following candle, you had a clear, noticeably lower low. Now, how much did we move in a 24-hour span? 46%. Now, you were lucky to get another shot at this 2 days later. But notice something about this candle. There's two very critical features here. One, it is an MRI reversal candle. But more importantly, this reversal candle, which also did not give you a lot of time to buy into the low, it also reversed 22%. But more importantly, this candle did not establish a new lower low on the close. And it did not establish a new lower swing low. And that's what separates this candle from the candle we had in May. This one. This one, unlike that one, established a new lower close. And that was enough for me not to call this the low while calling the one back in October the low. It had nothing to do with the fact that we fell to such a low price of 3,000 and people think it can't go any lower. It had nothing to do with that. Prices can always go lower and prices can always go higher. You know, Tesla can go to zero and Tesla can go to $1 billion a share, right? It's about the structure of the candles that gives me confidence in the future. And that was all the difference I needed in not calling this structure a reversal while calling the capitulation in COVID a reversal, is the fact that this candle did not break either of their relative lows. Does that explanation make sense?
Yeah, absolutely. Basically, the simple explanation is capitulation, strong bounce, higher low close. That's the formula.
Exactly. Capitulation with a strong bounce while establishing lower closing price and lower swing low, and establishing it, you know, visibly lower, not by 3 cents, not on some exchanges, but not on others, visibly lower across the board. Now, that is my criteria for having confidence in calling the low. It doesn't have to be that way. I mean, this can be the low, but I just don't have confidence that it is because it did not meet those metrics.
Yeah, more likely to be a low. If this truly is accumulation, it would be on daily and it would last a good 3 months, and it really wouldn't go below 30K except for maybe one push below 28K, similar to what you're describing. I do keep that open as a possibility.
Right.
That would be a spring.
Right. And this is why I don't actually have a price target here. And I have no prior support anywhere between 30K and 20K other than a Fibonacci line at around 26. Right. But I don't care for that. I mean, it's not important enough to me. Right. Like this structure, the COVID crash structure. I mean, this whole structure could have taken place at 6,000. Well, maybe not, because look, 6,000 was right here, right? So this is where I would not have wanted to see that structure. I would have rather have it seen here. Okay, now here's another example. Had this move been a little bit bigger off the low, had this candle, see, that's only 7%. Had this candle rallied up and closed above that moving average at 15%, or ideally hit the 20% reversal, like imminent within a day or two, that would have been an established low, because look, we've clearly established a lower swing low and a lower swing close. Okay, it didn't have to go all the way that low. It's the structure. It's the structure. Unlike this structure, yes, that's a reversal candle, but no real swing low was established. No real look. It's a reversal candle. It's bouncing off a moving average. That's great, but look at the structure. You know, you are double bottoming versus this. You double swing load, didn't establish a clear lower low. You didn't really establish a lower close, though you kind of did, because that is a reversal doji candle, but it's just not a clean structure. And this same structure could have occurred much lower. It could, if BitMEX didn't shut their servers down or they overheated or whatever, this thing could have fallen all the way to $1,000. And if it would have formed the same structure then, I would have called the bull market then. It's about the structure of the candles. And I do understand that Bitcoin is a 24-hour thing, right? And it's totally arbitrary where the close is. But you also have to take that into account. And this is why I don't pay attention to lower closes by just a few dollars or a few pennies. I'm picturing this in my head. Would this structure have looked the same if candle closed 6 hours earlier or 6 hours higher? And I bet you it would have looked the same.
Okay, one other quick thing. Speaking of candle structure, the quarterly close looks like the 1200 top and the 20K top to me, which is actually making me pretty bearish for 14K for the weekly 200 moving average.
Yeah, I've been meaning to look at the quarterly on the public stream. Maybe I will next time.
I mean, from a candle structure, that's a top.
It is, but I love how the MRI did a great job in calling the prior two tops, and it had no shot at calling the one before because it needed more candles for a history. So I'm gonna, close my eyes and trust the MRI on this one.
Yeah, that's a good point. That's a good point.
Like, for example, I'm sure this would have looked scary too, right? You just had a green star candle of the MRI, huge explosion up like this one, then a complete reversal candle, which would have been very red at one point during the month, during the quarter. And then the following quarter, you're trading on a red candle once again. So at the least, you should wait to see how this quarter closes, because we're still holding the moving average.
What's that moving average on the bottom you have there?
That's a good question.
Because that's where the bottoms have been forming. That's a good one.
That looks like the 7.
Okay, interesting.
That looks like the 7, and
that's reading what right now?
No, I'm sorry, that's what?
Where is that right now?
That would be at 26.3.
Yeah, see, that's what I do see that as a potential stopping point. And what's below that? What's the one below it?
That should be, if that's the 7, that's the 20.
And that is at what price? Probably 13,000.
13,000 exactly.
Yeah. Yeah, those are good. Those are good. You have that lined up really well.
Yeah. All right. That was a good question. Actually, that was a good look. Hopefully, people will watch this Q&A publicly on the structure of the candle. Yeah, but it all goes back to, I don't know where I'm still anticipating a capitulation candle, and I don't know nor care where it bottoms, as long as I get the structure I want to be confident that it's the bottom.